kiss your pension goodbye. I'll see you out.
See, even an 8-year-old knows this is bad news, okay? Because pensions are bad, okay? So, crashing. I just said about this, what was the title? Let me go back to my, just did this video. What did I title it? Canada's housing bubble explodes. Biggest mortgage lender crashes most in history. So guess what? Regarding that same mortgage lender, Zero Hedge has a follow-up on that, and I have another follow-up on that. Crashing Canadian mortgage lender bailed out. Remember, what did I say? I said, God help you or the pension funds, pensioners, if they're involved in this turd any way, shape, or form. God help you guys. I hope there's nobody in a pension involved in that one. Remember, did I not just say that? Let me read you the next headline. Crashing Canadian mortgage lender bailed out by 321,000 retired Ontario healthcare workers' pension. With Canada's housing bubble popping up amid the collapse of the country's largest mortgage lender, it was no surprise that a bailout had been orchestrated, and now we know the source of the $1.5 billion loan, and that is 321,000 retired healthcare workers in Ontario. Now remember, this loan was like up to 22.5%. All you pensioners who've been getting lackluster returns all these years, we're going to make up for it in one fell swoop. We're going to nail this company for 22% interest. And they're going to not fail because why? And there's some interesting connections between the CEO of this, board member of that, we're going to get to in a second. As we noted yesterday, the stock of Home Capital Group cratered by over 60%, its biggest drop on record, after the company disclosed that it struck an emergency liquidity arrangement for a $2 billion Canadian dollar credit line to counter evaporating deposits at terms that will leave the alternative mortgage lender unable to meet financial targets, and worse, may leave it insolvent in a very short notice. Not in a, but in very short notice. As part of this inevitable outcome, one which presages the company's eventual disintegration and likely liquidation, Bloomberg reported that the non-binding rescue loan with an unnamed counterparty will be secured by a portfolio of mortgage loans originated by Home Trust. The Toronto-based firm said in a statement Wednesday, Home Capital shares dropped by 61%, lowest since 2003, dragging down other home lenders. And now we know the source. As Bloomberg has reported, the Healthcare of Ontario Pension Plan, also known as HOOP, or HOOPP, which might in the future be renamed to just POOP, is the lender behind the Home Capital Group's $2 billion loan to shore up liquidity, citing people familiar with the matter. HOOP, which represents more than 321,000 healthcare workers in Ontario, was not immediately available to comment. HOOP President and Chief Executive Officer Jim Keohane sits on Home Capital's board and is a shareholder. Home Capital's external spokesman Boyd Ehrman declined to comment. In case you are one of the 321,000 retirees who are nervous about your pension manager's actions, don't worry. The loan is secured by a pool of mortgages originated by Home Trust. And as everyone knows in Canada, home prices never go down, do they? So here's the other interesting thing. Home Capital to possibly sell after $2 billion loan from healthcare pension plan. People with familiar with the matter have named HOOP as the lender behind the loan. Home Capital didn't identify the lender in a statement Thursday, though people familiar with the process said the healthcare workers pension fund is backing the loan. The Toronto-based lender hired RBC Capital Markets and BMO Capital Markets to advise on strategic options after it secured the one-year loan, according to the statement. A Home Capital sale could be the next step for the struggling mortgage lender facing allegations by Ontario securities regulators that it misled investors on disclosures tied to an internal probe that found 45 outside brokers falsified income information on mortgage applications. So That doesn't mean 45 applications were falsified. It means that 45 employees or subcontractors, same difference, 45 of them had been producing falsified loan documents. Again, you got a job? Yes. How much do you make? How much do I need to make? You need to make $80,000 for this loan, but I only make 50. Just write 80 down. You'll get the mortgage. Okay, write 80. That's what that is. Again, ninja loans. No job, no income, you're approved. Been discussing this ad nauseum. So about those 321,000 pensioners who are on the hook now. You're bailing out a company that has a bunch of subprime, if you know what I mean, mortgages on its books. And they're subprime because, again, these were fraudulent, as it said, falsified income information on mortgage applications. When you falsify information about your income, it means not that you make less, obviously. You make more. Because if you make less, you don't get the loan. So you falsify it to make more money so we can get this house. Which led us to where? Led us to foreclosures and everything else, which means the pension plans are going to have a bunch of foreclosures to deal with in the near future. Boy, your pension guy who handles your pension plan, oh, you got to give him a raise. You should give him a golden parachute when he retires, too. And isn't it interesting, the movie, isn't it already out now with Morgan Freeman and them, you know, where they got screwed out of their pension plan, they're old retirees, and they're going out with a bang. They're going to make the people pay who did this to them. It's out in the movies. Or is it coming? I think it's out now. Wow. High interest deposits have fallen over the past 4 weeks, making it harder for Home Capital to fund its mortgages. A sale becomes more likely if the firm can't raise guaranteed investment security deposits, GMP securities analyst Stephen Bolin said earlier in a note. We believe HCG's ability to raise GIC deposits and maintain operations is uncertain. Unless GIC costs stabilize, a runoff scenario or sale is a growing possibility. Oh no, it's a certainty. Trust me. The Healthcare of Ontario Pension Plan, known as HOOP, is a Toronto-based plan which represents more than 321,000 healthcare workers in Ontario with assets of about $70 billion. Minus whatever this one's about to cost you guys. HOOP President and Chief Executive Officer Jim Keohane sits on Home Capital's board and is a shareholder of the mortgage lender. Home Capital's external spokesperson, Boyd Ehrman, declined to comment. Representatives for HOOP and Keohane did not return calls seeking comment. So this guy's on the board. This guy's involved in all of it. And he's going to now, because he has the authority to do so, use your pension plan to bail out this other company. He sits on the board. Let me just say this now, make a prediction now, that when this goes down and the pensioners get screwed and hurt, Jim Keohane is going to be murdered. Just like on the movie that's coming out. They're going to kill this guy. You sat on the board of the company that we bailed out. You made this happen through us. And tried to make it sound great with this 22% interest nonsense. You're sitting on the board. Richard LeBlanc, a law professor at York University, said the loan appears to represent a conflict for Keohane, given his two roles. It's a conflict, absolutely, LeBlanc said from Toronto. An independent director should not have any commercial relationship with the entity at all. I mean, he can loan the money, but he should resign from the board. No, I'm going to back out and say you shouldn't have done that either, because the only reason you're doing it is because you sit on the board. And he probably has shares in the company, right? And if my company completely craters, my retirement, my shares are going to be destroyed. So since I've got access and control of this pension fund, I'm going to do my own bailout. The 1-year credit line from HOOP has a 10% interest rate on outstanding balances and a 2.5% rate on undrawn amounts. The finalized agreement follows an announcement early Wednesday that Home Capital had reached a non-binding agreement in principle with an institutional investor for the loan. But wait a minute, there was a 22%, or it was up to 22%. I guess we haven't looked at the fine details. Home Capital is also required to make an initial $1 billion draw and pay a non-refundable commitment fee of $100 million. The loan is secured by a pool of mortgages originated by Home Trust, the company's mortgage origination subsidiary. And I wonder how many, what was that word again? Where is it? Oh, yeah. 45 outside brokers falsified income information on mortgage applications. So I wonder how many outside brokers also falsified mortgage application stuff, income applications for this company that's billing them out. Bolin said estimates on a sale price for Home Capital would be speculative, but said commercial banks may be interested. Home Capital's market value has plunged to $445 million. We think this is at a substantial premium to current levels, he said. We believe HCG's book may be attractive to several banks that could run the business with materially lower funding costs, particularly if they have regulatory support for the deal. Meanwhile, short sellers are betting against Home Capital and rival mortgage lender Equitable Group, Inc., with short interest positions surging since mid-April. Shares of the two firms are the most shorted among Canadian financial companies, with investors having short interest in more than 56% of the shares available to the public, according to data compiled by Market. Genworth MI Canada Inc., a mortgage insurer, also has about 31% of its stock shorted, the data shows. So, hold on. A mortgage insuring company also has about 31% of its stock shorted. Well, that's real healthy. We're gonna short the companies about to cause a financial mortgage explosion, and then we're gonna short the insurance company that backs those guys, that insures them. Boy, this is just getting better by the second. And then another article they sent: Hoop's chief executive quits Home Capital board, citing potential conflict. Oh, he took the advice. We're going to step down. I'm going to go ahead and step down. But you've already made the deal. The chief executive of Hoop has resigned as a director of Home Capital Group and its subsidiaries, citing a potential conflict of interest, following the pension fund's decision to provide $2 billion of credit to the mortgage company, in which he sat on the board. He's been a director on Home Capital since last year and had been nominated to be reelected at the mortgage lender's annual meeting, scheduled for May 11th. Oh, May 11th, that day? Wow, interesting timing. But Home Capital announced late Thursday that he had Keown advised it that he would no longer be director for Home Trust, Home Bank, or the parent company due to the potential conflicts of interest. So anyways, this is like a nightmare scenario waiting to just implode. And I'm going to be covering it every step of the way if I can help myself. Take care.